Hello and welcome to the Assay TV. My name is Brett Stevenson. I'm here today with Owen Hegarty of EMR Capital. Owen is a good friend of the Assay. We had him in our ASX edition last year, and people responded very well to you, Owen, and we wanted to have you back on. And what better time when we're all working from home? I think most of the planet is working from home. We're just trying to stay at home in some fashion. So I just wanted to welcome you back, Owen. It's good to have you back.
Thank you very much, Brett. Well, lovely to be back and appreciate the opportunity to have a chat.
Yeah. And so how are things in the mining sector down in Australia?
Well, look, good question. And let me just rabbit on, I guess, about a few things. First of all, as you would expect, the mining sector is responding to COVID, actively and quickly and responsibly. And like every other industry, in a way, we're looking to protect our people, their safety, their health, their hygiene, and we're looking to protect our assets and our businesses. So that's obviously at the fore, and it's changing regularly, day-to-day basis almost, and the regulators involved as well. So, lots and lots of things to keep up with. So you'd have to say it's a heightened level of awareness and a heightened level of alertness, if you like, in terms of being able to respond to all that. So that's obviously our first and immediate set of priorities. I suppose the second thing I should say is in terms of, well, how has the industry responded? Well, of course, there's been significant sort of movement on the demand side, clearly, for the commodities space, with steel back and various smelters cutting back and so on and so forth. But equally, there's been responses on the supply side too. There've been cutbacks in supply and so on, sort of advertently and inadvertently, and sometimes ad hoc, and sometimes to do with regulations, sometimes to do with a lack of demand and so on. So it's not as if you've got great stocks of things building up. I think probably oil has been hit in terms of pricing, certainly more than anything else, from 60 or thereabouts to 20 or thereabouts. That's a very big shift downwards there, probably as you would expect in this type of environment. But iron ore is going, just as strong in a way in terms of pricing. And gold, of course, is shooting up. I mean, gold. This is the time, in a way, I suppose, perversely a bit, that gold shines. It's crises. It's people looking for safe havens. They're looking for hedges and so on. So they will go to gold, and you've seen gold, pop up quite well. In the base metals area, that we're interested in, obviously, in terms of copper, you've seen there's not as if there's great surpluses building up everywhere. There's a few dislocations, I guess, there, but a few disruptions, etc. But it has come off from the sort of 280s or thereabouts down into the 220s. Or thereabouts. So a significant reduction, but it hasn't been smashed in the same way that it was, for example, in the GFC. Zinc's come off as well, and other base metals in the bulk materials. You've seen coal come off. You've seen coking coal also come off. So they haven't been completely smashed up. There've been some variabilities there. The other thing I suppose I can say, Brett, in terms of the industry, the exchanges have been up and down a bit, as you've seen the Dow and the ASX and various others have come off, and the miners have been hit pretty hard. Generally speaking, you've seen valuations come down, and some of our good friends in the sort of mid and junior space have come off a lot because they are more vulnerable, whether they've got projects or operations that they're looking to expand and grow. So you've seen valuations come off, and that makes it more awkward, more difficult in this environment to be putting funding together. So that's a sort of a bit of a ramble on there, Brett, but they're the sort of 3 or 4 or 5 impressions so far.
Yeah. And, you kind of went into some, answers already, the questions I had. You're talking about gold. Gold is obviously continuing to have its, event after event, it's having its kind of, shine, so to speak, no pun intended. And gold is, is the price, I think it was 1750 it hit the other day in US dollar. And so I'm just wondering, does the gold price and kind of the valuations kind of make you want to revisit some juniors that you've been looking about in the past for investment during this time?
Oh, definitely, definitely. I mean, look, as we keep saying, gold is, you can never have enough of it. It's a commodity, it's a currency, it's a store of value, it's a hedge, it's a safe haven, it's all of those things. And these are the times that it actually shines. And not only is it going to shine now during this crisis, which is obviously going to go on for some time, one way or another. It's going to be called a crisis, or whether it's going to be called a recovery, or whatever it's going to be continue to be called. That's what gold will continue to perform well. And when we do come out of this, as we inevitably will, then you're going to see lots of the stimulus packages kicking in. You've got some potential for inflation and so on, and that's another time that gold shines. So it's it's a metal. It's, as we say, it's the perfect metal. It's a metal for all seasons. So the other thing, in terms, Brett, of those, the juniors, whether they be, the exploration companies or the development companies with resources and so on, or indeed the mid-cap mining companies. I mean, we're always looking for opportunities in gold. It's one of our preferred metals, commodities, if you like. So always on the lookout for those opportunities. And it is more difficult, even though the price is up. And yes, there is capital being raised. It is still quite difficult for particularly some of the earlier stage boys and girls to get their money together. So look, we're always looking at those opportunities at this time. It's a little bit different, not completely the same as the GFC, where you had the money just disappeared type of thing, whether you're a junior or a senior. In this instance, whilst you can actually still hear people's purses snapping shut, there is money still available, for good projects, good people, good track record, and so on and so forth. So it's not as if that capital is dried up, and in fact, you're still seeing on the ASX, the gold companies, they're doing deals. So, the market is open from that perspective, Brett.
Okay, well, yeah, thanks. And I guess maybe also just wanting to kind of, you might have likely a similar comment, but I maybe just want to kind of detail a little bit more in copper. Can you talk a little bit more about how copper is maybe picking up maybe more into some activity in China? Some of the smelters might be kind of going a bit more. I know that there's some supply issues, but copper, I was speaking with Chris Berry last week, and he just said, if you're looking at EV stuff, whether it's nickel or copper or vanadium, this is just a big bump on the road. You got to take a 20-year view, I guess, wondering what your view is on copper here.
Well, again, look, Brett, we could talk all day about copper, and you'd probably thank me for not doing that. But look, it is certainly one of our favourite commodities. We are long, and we just simply want to be longer of highly competitive quality, effectively unhedged copper. So that's what we want to do. But and again, very, very important at this time, because you've got copper being, one of the noblest of all metals, multiple diversity of uses, a big industry. It's 25 to 30 million tons a year, so it's a big industry. It's used in everything, whether it's a capital good, it's a consumer good, an infrastructure good, and so on, and all of those things. Then, and the whole communications and information technology revolution, it's effectively powering that. It's electrifying China and the rest of the developing world. So it's got all of those uses, and it has outperformed everything except gold, I think, certainly for the past 20 or 30 years, and was going to continue to do that. And now you've got a couple of extra waves, Brett. You've got the whole EV renewables surge going on in terms of the battery metals and of that whole industry. So you're going to get another uptick, if you like, in demand from that area. You've also got, and coming into focus right now in this dreadful COVID crisis, coming into focus right now is that copper has, antimicrobial, antibacterial, antivirus types of qualities, right? And so they're developing those up as much as they can. And you will have seen from the Copper Development Association and the various other research institutions in metals around the world, you've seen those qualities of copper. Well, they will now be obviously much more advanced, I suppose, than they have been. And speaking of advancement, I suppose we're a live example of bringing forward, in fact, the future in respect of this whole information technology, the whole work from home, the whole of making sure that your house or wherever you happen to be, you've got access to, best in class, best in show communications, particularly in your industry, in that communication business. You've got to have all of those things. You've got to bring them forward, and guess what? There's going to be elements of copper in all of those things. So, look, I 100% agree with you there. It's a metal that is front and centre, and we just want to be as long as we possibly can. And that's actually quite hard, because good projects and good operations and good deposits and so on in copper are becoming increasingly hard to find, Brett.
And also during COVID-19, I'm wondering more about potash. There was, frantic buying globally of food and produce at the grocery store, and there was, whether it was in Asia or the Americas or Europe or whatnot. Do you think, this is a good opportunity to be looking at potash as investment, just because, there'll be higher demand for food going around, and maybe there's more demand for fertilizer, and then what does that mean? There's more demand for potash, I guess. Maybe get your thoughts on that.
Well, no, look, much the same, definitely. We tend to agree with all of that. You're going to have larger population, you're going to have higher protein diets, of standards of living improve and increase, higher requirements for various things that are requiring fertilizer. There's less arable land, bigger population, all of those things. And as I say to people, I'm living proof that people are living longer and eating more. So there's bound to be more of it. I mean, the potash industry, again, as you know, it tends to be dominated by the bigger guys, the good scale deposits and so on. But there is still room for the smaller guys, and you're seeing that in Australia, in the West. We have our own smaller projects, one in Spain and one in America. So there's still good opportunities for the smaller juniors to get involved, and I think they've actually done a really good job of promoting their companies and promoting their projects when the industry tends to be dominated by the bigger end of town, so to speak, Brett. So I think on balance, the world is actually not short of potash, but new projects are taking longer, they'll cost more, and so on.
And during this kind of big bump with relation to COVID during this cycle, I'm wondering to you, what are you looking at the indicators as the recovery in the mining sector? Like, what does that look like to you?
Well, yes. Well, there's no question that we're going to recover. I think we're all sort of agreeing on all of that. It's only a question of time and shape and structure, I suppose. I mean, and there's lots of people talking about it and doing terrific work, by the way, in terms of whether it's going to be L shape, V shape, U shape, W shape, N shape, whatever, polynomial shape that you can actually come up with type of thing. But there's lots of work going on, lots of thought going at it. One thing is for sure, of course, apart from the fact that we will recover, is that the stimulus packages that have been announced, and there's various people who track all of that, have been terrific packages here in Australia. They're getting ready, and we've appointed a government task force there under the direction of Nev Power, and a very, very, experienced and capable group of people to lead that industry recovery. You're seeing financial stimulus that's coming from all over the world, in the developing world as well as in America and so on. And you're seeing the EU, IMF, and all of the other multilaterals and bilaterals sort of getting themselves ready in a way to be able to, get people back to work, get industry going again. That's what they'll be looking to do. So you'll certainly see, it'll be good, strong recovery. I don't think there's any doubt about that. It's a question of over what period of time, and there's bound to be a few sort of disruptions and dislocations and so on from time to time in that. But and I think the commodities side, the copper, gold, base and precious metals, all of our commodities certainly, and potash, are all in good position to be able to recover well from that, Brett.
Yeah, and even though as you will likely recall, like after SARS, there was like this activity of just cutting, and they thought this was going to go on for so long, but then when July came around of 2003, there was just this huge uptick in activity in the supply chains, and a lot of companies, multinationals in Asia, just had to really kind of they had to go kind of caught with their pants, around their legs, and they had to go back and hire all this staff that they had cut, and so the orders were massive. They wanted to get up rolling again, and it was just a huge bit of economic activity. So I agree with you. The recovery will come, and it actually could come back with a vengeance, so to speak. And so, yeah.
Well, that's right. And in the meantime, what we have to do is stay vertical, keep our people safe and healthy and at work, and keep our businesses, safe and healthy and vertical. And look, I have to say, the mining industry, and particularly here in Australia, very well prepared for that, because we're remote sites, but being remote in a way, yes, can be a bit of a disadvantage in terms of travel and transport and so on, but it can be an advantage too. And you're always prepared for this type of an emergency, whether it's a tectonic or bushfires or financial or availability of people and malaria or various other things. You're always prepared for these sort of things. So the mining industry's, preparation, I suppose, very, very good. I mean, there's no question that the quarantining, the self-isolation, the social distancing, and the way in which we have to do our work now is different, and that can slow you down. At the same time, it can slow you down, but it can lead to opportunities as well. And I have to say, the government at the national level and at the state level here, the state level all in Australia, been very, very helpful, very, very supportive in terms of ensuring that the mining industry, it's an essential industry, keep it going. I mean, obviously it's got to be safe to be able to do so. You've got to protect the vulnerable. You've got to protect your people. But we're doing that, and as I say, we're well set up to be able to do that, and in a way, so far so good. There hasn't been too much disruption, certainly at our operations, 4 of them here in Australia, or too big an impact on most of the others around. So look, I think it's fair to say that we're well prepared for it, and in reasonable, relatively good shape. Put it that way, Brett.
That's good. And just kind of maybe building upon that, I'm just wondering, during this time, there's a lot of this preparedness for amongst juniors and the mining sector in general. What is we're kind of in the thick of it, I guess, or I don't know what stage we're at, we'll see. Other, different parts of the world are in different stages of this. But what should junior miners be doing right now in terms of getting preparedness or looking attractive for investment? What should they be doing right now just to kind of get ready to ramp up later on, or kind of look for that investment? What are your thoughts on that?
Well, I think, again, good question. And I think that the key issue, obviously, as we've said a couple of times here today, is, well, stay vertical and stay safe and stay healthy and keep your business in good shape and be alert and be aware in a heightened state, but not alarmed, type of thing, and make sure you do all of those things to survive. At the same time, there's no question, be ready to come out of it. And you know, the more you do what we've just been talking about, the more prepared you're going to be to come out, because there will be, and particularly if the infrastructure projects and various other of those stimulus packages that are going around, there will be good opportunities for your product in terms of pricing and placement, and there will be very good opportunities for sure in terms of financing too, because governments and institutions and banks and equity and debt institutions will all be looking to be part of that wave of recovery, and therefore they will be looking for some sort of early wins, some early gains, some early projects, and so on to invest in. So I would certainly be on that heightened level of, as we say, of awareness and alertness, and keep doing what you're doing in a way, and be ready to take advantage in a way and be part of that wave, however fast it's moving and however high it might be, and whenever it comes, Brett, to take advantage of it at that time would be my simple advice, I suppose.
Okay. All right. Well, I don't want to keep you any longer, Owen. This has been great. I hope we can maybe chat next time, maybe at an Asia Mining Club event in Hong Kong or something like that. I hope to see you then next time. But I just want to say thank you for your time and joining us today.
Good on you, Brett. Well, thank you very much. And yes, indeed, I do look forward to seeing you up there in Hong Kong at the next Asia Mining Club. See you there.